You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to kick off our broadcast week here on the Options Insider Radio Network. Yep, it's time for the Option Block every Monday and Thursday, noon Central, 1 p.m. Eastern, is where you can find this show live after the fact on pretty much any device on the planet and platform you want to listen to it on. Of course, if you like what you hear, leave those reviews so other folks can continue to discover this program. Been running for a long time. It's a stalwart here, but we love to see the new ear holes joining us all the time. The more the better. Of course, if you like what you hear, leave a comment, or I should say leave a review, but also send those questions. Get those questions coming to us as well, because we do love to hear from you guys. I got so excited. I forgot to introduce myself. My name is Mark Longo from the aforementioned network, as well as, of course, from theoptionsinsider.com, the place to go in between episodes for all sorts of fun content, including our ORATS reports and everything else. And, we're kicking off our broadcast week. Kind of want to get things rolling. I want to get the juices flowing a little bit. So let's kick it off a little bit different style this week. Maybe it's something fun we're going to do going forward. We're going to play that, name that tune, but a fun, amped up 80s edition. So without further ado, let's get going. All right, that's about all we can handle before the YouTube censors are already going to go crazy that we played that much. But that's a fun one. Uncle Mike, let's play Name That Tune. Kind of an easy one to start this challenge off because they say the name right in the beginning there. But it gets you fired up, get you pumped up. That was a good one from back in the day. So Uncle Mike, sir, A, welcome back to the program. B, can you name that tune? What show is that from, sir?
Oh, that's easy. The Thundercats with Lionel and Snarl. Thundercats are on the move. Thundercats are loose.
That was a good show. I knew they would go. If Sebastian was here, he'd be going crazy. By the way, Uncle Mike obviously coming at us from the mobile office here today, which is why he sounds a little bit choppy there. He's not a big fan of Comcast today. Let's see if the Rock Lobster can, you already guessed it, so I guess we know. Uncle Rock Lobster, you can pile in for extra bonus points if you want. And then B, welcome to the show to you as well, sir.
No clue at all. No idea. No clue. I'm just an old dolt. So I think I'm 10 years older than both of you guys. So that's I
had a feeling that one might have slipped under your radar there. So there you go. That's why I went to Uncle Mike first, because I figured he might at least know what the heck that song was. All right, Sebastian, wherever he is right now, losing his mind that he missed out on that one. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. Coming into today's show, kicking off our broadcast week here. Yet again, the markets are feeling the love. The bull has the bit in its teeth, off to the races, all green on the screen, pretty much, except for the Dow. The Dow is a bit of the laggard. It's off about 0.2%. S&P, though, up about 1/3% right now, and the NASDAQ up nearly another full percent. So the NASDAQ just took a little bit of a break towards the end of last week, but now it's rested up. It's rearing to go. Even gold and oil, both in the green today. Gold at about almost just 2.5 handles under that 2,000 level again. And oil, WTI, hovering at 42.5, so up about 0.5 point. So there you go. Crude, despite the fact that the options are fading that upside, crude is saying, you know what, we're going to keep rallying. Coming into showtime, we saw our old friend VIX Cash at about a 21 3/4. That's pretty much unched from last show. It's up slightly, up about 1/4 point or so, but not a lot. So getting some of that weekend juice back, and that's pretty much about it. VVIX at about, looks like about 111.5 coming into showtime, puts it down about 2 handles from last show. So VIX still moving around, still frothy, still juicy up there. And our old friend VXX continuing its downside plunge, down about 0.5 handle to about 24 3/4. Speaking of things that are down, looks like a lot of you out there are having problems with TOSS, a.k.a. Thinkorswim this morning. The internet is awash with grumbling people out there. I shouldn't say grumbling, righteously angry people at their main platform. It's a shame because TOSS has long been one of the marquee platforms out there for options traders. A lot of you I know love it, swear by it. That's your go-to platform. And to have it have so many outages, you know, we people rag on Robinhood, and rightfully so. When they have their outages, they say, oh, well, you get what you pay for, you know, blah, blah, blah. This is a marquee platform having yet another outage out here. People chiming in out here. I saw this one guy's tweeting out a picture of, looks like, what's her name from that movie, Blind Box, or on the I forgot her name. I'm blanking on her name right now as well. I remember it as soon, but she's running around with the blindfold. What was that horror movie on Netflix with the blindfold? I'm blanking on all of it. They tweeted a picture of that because that's what they are today on Thinkorswim. They're trading blind. This one guy tweeted, I'm back to trading on Ameritrade.com like the Pilgrims used to on the Mayflower. I like that. So hopefully I'll have to check and see if TOSS is up right now, but hopefully you folks out there, a lot of you I know like your TOSS. Not exactly getting a lot of that TOSS love here today. Mr. Rock Lobster, let's go around the horn now to you. Let's see if you can make up from your 80s ignorance, sir. What is lighting up your tape? And are a lot of your crazes? And a lot of them like to hang their hats in TOSS land. A lot of them, are they grumbling in the pit chat today, sir?
Were you thinking of Sandra Bullock in Blind Box?
Thank you. I knew it began with an S, but for the life of me, I could not say the word.
I just, you know what? I find using that line from Demolition Man. All restaurants are Taco Bell. It's like all vol is 22 with VIX.
Yes.
Like it just, or say split and stock goes up 15%. Or like there is so much this honest, you know, some of the action reminds me of the mid 90s, or the mid to late 90s for like 95 to 99, where we had a crazy bull market and don't know where it ends or where it stops or whatever, but holy guacamole, just mention anything and stocks go up $100. So to me, there's just not a lot of sellers, and there's a lot of small paper buying, and that's what you got. So, remember, like, dealers really don't make markets anymore in these stocks. Ever since they changed all the incremental pricing, I don't know, 20 years ago or something like that. So stocks can fly, and they're flying. So. My Tesla, I guess we used to laugh about the 100 puts. Those are $1,600 ago, almost $1,800 ago at this point. So all I can say is that's the market we have, and we'll see how it goes. But I think also too, people are understanding they're not quite getting what happens when stocks split. You actually, if you have options near the start, you get more short gamma than you started with. Because remember, there's a square in the gamma part. So it's not exactly how you think. So if you're a premium seller and you've written more premium, you could get you could get a bit of a shocker there. So I would tell everybody to be careful at the split, or be careful how you fade it and all that kind of stuff. But anyway, just interesting times. When is it not interesting times? When your life is the stock market and options every day. But anyway, that's a report. Besides, I just closed some VIX puts for the first time in a week. So vol is making new relative, I guess absolute lows for the COVID cycle, I would say today in real terms. Interesting from that point of view that SEP future is starting to come down a little bit from very, very, very lofty levels. So anyway, it's kind of a nibble at this point, but we'll see what happens. And that's about it, but very exciting times.
Yeah, we can kind of rinse and repeat pretty much every week. The old Chinese proverb / curse, may you live in interesting times. We're all living in them right now. And I do, as I recall, Mr. Rock Lobster, you did warn our audience last week there might be an opportunity with that SEP future to short it. So hopefully you listeners, and got in there, because you're right, it is coming in a wee bit out there today. Let's see what is lighting up the tape now in the hinterlands of St. Charles. Let's also see if he's cleared up the old connection out there. Mr. Uncle Mike, are you there, sir? And what is lighting up your tape, if you are?
I am here for sure. So a couple things. First off, I forgot to say this in the opener. Thundercats! Oh! So I had to get that out.
I knew that one would get your juices flowing, sir.
Oh, you got me. But anyway, so I have a couple indicators that I go by. But one of them, I really don't go by this indicator, but maybe I should, because it always seems to predict the future amazingly. So whenever the retail, and this is something that's been said before, whenever a retail investor is really bullish on something, whenever the excitement of the market gets out to the mainstream, it's usually a bearish sign. So maybe a week before COVID came out, or before the market peaked, maybe about a week beforehand, I have a college student who's a client, and she's the daughter of a client of mine. She's just trying to get started with investing. She's doing amazing things. She's extremely smart. She's actually a graduate student, and she has roughly $1,000 in her account. And she has a lot of this was just money she wanted to invest and just to get started with things. She has some student loans she needs to pay off, not a lot, but she has been a phenomenally smart financial person since I have known her. She's really getting her life off to a great start. And probably about a week beforehand, she wanted to know, I could probably continue to pay the student loan, or I could defer it a little bit. But you're doing really well, Mike, with the investments. And, I just have her in some SPY basically. And, I want to continue to have this go up, and she had her checkbook in hand, wanted to write a check. And so I'm like, oh no, because she doesn't follow the markets extremely close. I mean, she does, but she's not like a lot of the people who listen to this show. And so whenever people of that camp want to get bullish and are getting excited and come to me wanting to not pay their student loans to put more money into the market, that's usually a very bearish sign. Now, thankfully, she decided to continue with her student loans, and she did do the right things, but she just wanted to ask a very valid question. And so probably it was on Friday, another client who's also very responsible, phenomenal client, but just it's not a very close market follower. I would say probably 90% of my clients are very close market followers, meaning if I were to sell a put spread and do it a little bit different than I normally did or something, I'd have a phone call within 2 minutes. That's how most of my clients are. But the other 10%, they're just a little bit more passive in terms of, okay, go ahead, do your thing. And that's it. So this other client emailed me on Friday wanting to start trading some stocks. My buddy just told me about how Tesla is about to split, and I want to get in on that. What do you think? And so I emailed him back saying, let's talk. And so we haven't spoken yet, but that's another one to where it wasn't necessarily just Tesla. He wants to start getting in on this market because this market is hot right now. And so that's I don't officially use that as an indicator, but usually whenever I get an email or a call like that, it's typically the death of the market coming pretty soon, or it has been through the years. Not every time, but a lot of times it has been. And by the way, when Bitcoin first came out with the futures, my phone was ringing off the hook of everyone who wanted to get in on that. So you know my opinion of Bitcoin, so thankfully they didn't do it. So that's one thing that's really kind of making me think right now. And the other one is the S&P 500. Right now, we are just tinkering around the all-time closing high of the S&P 500, and we have just been tinkering there for a couple of days now. 33.85 as I'm looking at it right now. We need the all-time closing high is 3386.15. So we're less than a point away from the all-time closing high. We're still about, I believe, 10 points away from the all-time high. So we're really close to it, and I just can't quite get over it right now. And so, of course, one of two things can happen. Now, be alert. I'm about to state the obvious, is that the market can continue to go higher, and the buy high, sell higher people are going to be doing well, or the market can totally fall on its face, or the market can do whatever it wants. But with it, just understand that all-time highs can be a big barrier for markets going higher. The other thing to understand with this is definitely a tech-driven rally today. Tech is the sector that's kind of doing its thing, along with a little bit of the consumer discretionary. But for the most part, tech is something that's definitely bringing this market higher. So just be mindful of that when making investment decisions as to what we're doing with it. Also, the other unique thing about this market today is that the categories that I like to watch, typically commodities, stocks, and bonds, the value of IEF, which is the ETF that I watch that tracks the 7 to 10 year government treasuries, that's higher today. My beloved silver is higher today by almost 4%. And then the S&P 500 is higher today by roughly 0.33%. So usually when all of those things go up in the same day, something a lot of times happens the next day. Could be markets move higher, could be a lot of different things, but I am expecting a lot of movement in the near future in one of those three things. I just can't say which one it's going to be because I don't know. So that's what's lighting up my tape within the numbers. Also, we have the macro news that's going on. We have Trump tweeting saying that he's ready to do another stimulus package, but the Democrats won't let him. The Democrats want their thing, and there's a lot of chaotic things going on. Of course, college football, the Big Ten canceled their season, but they already got the players are getting petitions signed saying that they want to continue to have their season. So we have that going on. So you can't say that we are starved for news right now, that there's nothing going on. I guess you could, but you'd be a bold-faced liar. You'd be a big-time liar if you did. And that's what's lighting up my tape, Mark.
Well, in honor of your grad student client there, I happened to just be looking at this, and it kind of struck me as odd. Here's some data on, of course, everyone's talking about unemployment as a result of the pandemic. These are the college majors with the highest unemployment, right? So the unemployment rate for each U.S. college major graduate. Number one, physics. That surprised me. You know, there's the old yarn of, oh, you're an English major or a liberal arts major, you're going to go work at Starbucks, right? If you're lucky, you can't get a job with that degree. But physics majors, unless that means just squarely undergrad, that could be the case, in which case physics, you probably have to get a PhD. That's kind of the deal out there. Number two is mass media. Whatever the hell that is. Is that maybe the new flavor of communications? I don't know. Three, miscellaneous tech. I don't know who created these. Where did this come from? This is the Daily Shot newsletter from the Journal, so this is usually a reliable source. Number four, anthropology. Let's see, ethnic studies, number five. And then computer science, number six. Wow, that's ahead of political science right now, number seven. Wow, then sociology, number eight. Fine arts, number nine. Architecture, number 10. At an even 5%. The number one, by the way, physics is at 7.7% unemployment rate. So I guess the moral of the story, don't go get a physics degree right now because it ain't paying off. Let's go out. Let's see what's paying off from an overall volume perspective out here in the marketplace. Listeners, coming into the latter portion of the trading block, we're seeing VIX doing decent paper for this seasonally quiet period. Over half of its ADV on the tape, closing in on 200,000 contracts as of pretty much right now, ADV about 322,000 out there. SPY at about 1.5 million exactly. The ADV 3.5 million. So not quite halfway there yet in SPY. SPX 402,000 contracts. The ADV 890. So the ADV is ticking down pretty much every show, and yet not even yet there yet as well. So quiet period out there in SPX land. The Qs 303,000 contracts. The ADV 1.03 million. So Qs have a way to go as well. IWM at 131,000. The ADV is looks like about 490,000. So IWM has a way to go as well. Let's move on out to the most active single names, what you guys are trading out there individually. Number 10, JD, which is from JD.com. Got a feeling we're going to get into them in a little bit. 135,000 contracts on the tape as of right now. Number 9, Uncle Mike, cover your ears. It is Cisco, yet again, still in our top 10 there. Number 9, 147,000 out there. Number 8, gold. I think Austin Powers probably fought them for this ticker out here. This one is, of course, Barrick Goldcorp, and they have 168,000 contracts out there. Not Austin Powers, the other one, Dr. Goldmember. That's right. Number 7, I'm forgetting everyone's name today. 7, Microsoft, 174,000. Number 6, NVIDIA, 188,000. Number 5, good old Neo, a perennial top 10er these days at number 5, 249,000. Number 4, Walmart, back in the top 10 here, about a little north of $250,000 on the tape there. Number 3, Bank of America, 283,000. Number 2, Apple at a 400K even. That means what could be number 1? You probably could guess it. Yes, it is Tesla, 507,000 contracts out there. That's a quiet day for both of those of late. Uncle Mike alluding to earlier, the stock split furor that both of those names have been in ever since announcing that news. Let's see what else is going on out here from an earnings furor and earnings frenzy this week. We got JD.com today. Tomorrow, Walmart, hence their inclusion in the top 10 today. Home Depot tomorrow as well, and Kohl's. If you like some big box retailers, they got you covered there. Wednesday, more of them. Lowe's, Target, and NVIDIA for adding a little bit of a tech fix there towards the end. Thursday, Alibaba going overseas again. Estee Lauder. Don't see that name in our top 10 too often. BJ's Wholesale Club as well, kind of a mini Sam's Club / Costco out there. Friday, John Deere and Foot Locker. Let's look really quickly. We've got some reports for all these earnings reports, courtesy of our friends over there in Orat's Land. You guys can get them for yourselves for free. TheOptionsInsider.com. Let's go to Walmart first. There on the 18th before the bell. As of this report, they were at $132.60. They were pricing in $5.81. In the past, they moved $5.47. So a little bit of extra juice. We know lately that really isn't warranted this season, so we'll see if that comes back to bite them out there. Lowe's, $154.34 is where they were, and this report was generated. $8.39 is what they were pricing in. $8.51 is what they've moved in the past, so kind of a big nothing burger out there. Let's see, what do we got here? NVIDIA, $462.56. Man, that one has rallied. $30.22 is what they were pricing in. In the past, they've moved $26.17. So a little bit extra juice there as well. Alibaba, $253.97 as of this report. They were pricing in almost $13, $12.89, and then past they moved $7.87. So that's extremely rich for Baba. So that's probably an interesting one to watch. This season has kind of been the death of premium buyers out here. Let's see if that comes back to bite Baba. There are some reasons, obviously, pandemic, international trade issues, and other things that could be contributing to that lofty bit of juice out there. Let's see if they have what that IV. The 30-day is 42, almost 43. That seemed like it would be higher for that level, but it's about a 43. So that's not terrible. It looks like they're pricing in, it looks like about an extra 6 or so points as a result of the earnings bubble out here. BJ's, that's popping off on the 20th. They're at about 41.5 as of this report. They're pricing in about $4 even. In the past, they've moved 2.5. So a little bit juicy out there in BJ's as well. Let's see. There's a bunch of others you guys can check out for yourselves. TheOptionsInsider.com. Now it's time for us to keep on rolling. Time to get weird. Time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird. Time to get wild. Time to go out to JD.com. That's where we're starting our odd block today. They had earnings before the bell today, hence a lot of this paper we're seeing out there today, listeners. They also came on the radar. I mentioned earlier they were in our top 10 just a few minutes ago. Our friends over there at ORATS also crunched some unusual activity scanners over there as well. And on their scans, they had JD at number 6 with nearly 2 times their ADV so far that's coming into the show. They had 88,400 contracts on the tape versus the normal volume of about 47,000. Calls leading the dance, 68,000. Only 20,000 puts on the tape out there. So interesting stuff out there. Let's see what our Eye of Sauron found. And it was also out there in JD. But before we do that, let's go back a little bit in history. Let's paint the picture. Let's set the table. Let's set the scene here in JD. Of course, ticker symbol, appropriately enough, JD. Trading right now about 65.5, up about 3.5 or a little over 5.5%. This name a year ago was trading pretty much half of this thing. It was at 31.5. So it's had a good run over the course of the past year. It kind of gently drifted north. And right before all the madness popped off, March 6th, it was trading 44.62. And then it only sold off very briefly. It sold off down to 35.25 on March 16th. And then it never really kind of looked back. It's been off to the races. This is, of course, a Chinese e-commerce company, so kind of analogous to an Alibaba or a Chinese, not quite. Actually, it's B2C, so it kind of has a bit of an Amazon flair to it. Either way, the stock chart certainly looks like it because it never really suffered much from this big malaise of March and beyond. It's kind of just off to the races. It topped out at almost 70, 69.18 not too long ago, and it's kind of been flirting in this low to mid-60s range ever since. That's where we find ourselves, and of course, today we had our earnings, and it's up another 5.5%. Our Eye of Sauron, like we said, the ORATS folks highlighting some calls. Seems like we got some calls on the brain out here as well. Our Eye of Sauron picked up some Nove 62 halves going up for $6.30. This is through the offer. They were offered at 6.25 on the Philly. This guy said, I want to get 7,000 of these done. Actually, 7,032. So let's go up to 6.30 so I can get this thing done. Let's see if this was late. This is not late. This is just through the offer. This was obviously earnings are today before the bell. So this one came on our radar, 62 half strike, and then also noticed separately, this is looks like about 20 odd minutes earlier, also saw a print going up on the SEP 62 half, 6,200 times as well. Those were on the bid. They were, they were 365, I should say, at 380, and they went up 6,200 times for 365s. Now, most normal days, I would say these are not put up as a spread, but it has the flavor, the feel of a roll closing out the SEP. Buy in the November out there. But today is a different day. Today is a post-earnings day. A lot of paper going up, so I'm willing to maybe view these two as separate trades. It's not exactly a roll. If it is a roll, too, usually something like this, you see somebody, they're rolling out, they're probably going to roll up to A, they're going to save themselves some money, B, they got to give themselves a little bit more upside over there to play with in terms of premium. They can actually get a little bit more done if they go up a little bit. So usually they roll up and out. That's not the case. They just rolled out here if that's a roll. So I'm going to say this is not a roll. These are just two sizable prints that went up near each other out here. It is earnings day. 62.5 was the at-the-money strike right before earnings came out. So that's probably why we're seeing so much action on that strike. But still, they are coincidental enough. They're closely timed, close, exact same strike, and close in expiration as well. So perhaps Mr. Rock Lobster will take the counterpoint. He will say, nay, I disagree with that. I think this is a roll. Mr. Rock Lobster, what do you think out here? Just two unrelated bits of call business here, or do you think this is actually a roll, sir, in JD.com?
You know, when you look at this, you go, well, I'm kind of thinking, how can it not be a roll? You know, it's sort of, it feels like somebody's kind of paying up. They've got a love for JD, Chinese internet stocks going to the moon because apparently everybody in China is shopping from home too and all that kind of stuff. It's feeling rolly, don't you think?
I mean, it looks like a roll. Today is a bit of a weird day, though. They're doing a lot of paper out there. But the size, the strikes, the proximity to time and to expiration, it has the whiff of a roll. I will give you that.
Oh, yeah. It's definitely, it has rolling. And I think they just, ultimately anybody's riding to September. They want to stay on the train. They want to ride that train.
So you're putting yourself firmly down, foot stamped in the roll category. I could certainly see an argument. That's why I brought it up. It's certainly the first strike was the one that came off across our Eye of Sauron first, and we had to dig a little bit to find the other SEP leg. And again, we don't know if it's a leg or not. Feels like it, though. It does feel a little bit like it. But I'm willing to entertain alternative options. I'm also willing to watch this one. So we're come back to this bad boy. I also want to dig a little bit, too. We kind of just found that SEP leg right before the show. I want to see if when that SEP was open, maybe that'll play a little bit into my thoughts and feelings on this. But right now, I'm willing to entertain the notion that this is a roll. Weird they kept the same strike, but hey, weirder things have happened out there. Usually I like to line up the premium a little bit more than that, and they ended up paying, looks like, close to $3 if this was a roll. So, interesting stuff out here. Let's keep this one on the to be watched as we move on to our next name. This is the name, you wake up in the morning, you get your coffee, brush your teeth, do what you got to do in the morning. Then, of course, you check your tickers. And one of these is, of course, Principia Biopharma Inc. I know that's on your list. I can hear you shouting through the machine as we speak. Say, of course, that's my ticker of choice. Forget Tesla, forget Apple. It's all about Principia Biopharma, a.k.a. PRNB, as if I had to tell you what the ticker is of Principia Biopharma. You guys all know. You guys all love this name. Trading $99.18, as if I had to tell you that. You guys know this name. For the few, the handful of you who may not be aware of the travails of Principia Biopharma Inc., let's go back a little bit. Let's go back to a year ago. It was trading $39.25. So interesting run here for good old PRNB as well. And as any good biotech does, it's going to have some fits and starts along the way. It started having its first fit to the upside here in December when it went from about 36 up to, looks like around, where did we get top out? About 60, almost $61. So nice little run for this one. Then it kind of hovered there, sold off to 50 or so again, but it kind of hovered in that inflated range, and then it popped up to 74 in February, and then we know what happened in March. Everything sold off. This one got down to 43 and change, looks like, in the mid-March, and then it kind of popped again, up to almost 60 on March 31st. By April 20th, it was trading 70 even. So it had a nice little recovery. Then it sold off again down to 60 in mid-May, kind of flirted around that level for a while. This is one of the few names that seems to have bucked the June 8th day. That's this day that really had no bearing for this name. Most of the other small names you talk about here, June 8th was kind of the apex of their recent chart, not this one. And this one kind of trended down again, down about 56 and change until July 8th. Then it just went off to the races, shot up from 56 up to 87.5, and it's been up in this level ever since. And then recently, another upswing here, up to where it is right now, 99.18, up 8.5 today out here. So a big one out here for Principia Biopharma Inc. out here. Big active name in Principia. Let's see. What did our Eye of Sauron find? It found some freaking calls, that's for sure. Nove Pars. Interesting strike selection because that's pretty much right exactly where we are. We're at 99 and change right now. 19,000 is what our Eye of Sauron first found. Going up this morning on the Philly for 45 cents. These were crossed mid-market, tied to stock. And let's see, the 19,000 of those, but they weren't done by a long shot. Then another 7,000 came in. Let's see, these were, it looks like a couple hours later, but they went up a lot throughout the morning. A couple hours later for 40 cents, 7,000 more times, 2,000 more, going up for 28 cents a few minutes earlier. So these are interesting pricing here. And then a total on the day so far, at least, we saw 36, almost 37,000 of these bad boys on the tape. So somebody looks like liking themselves these PRNB Nove Pars to the tune of about 37,000 going up today. A good chunk of them tied, done to stock. Let's see if I have where the stock was. I don't think I have the stock level here, but obviously this was done tied to stock, so that changes the narrative. Actually, I do have it here. The stock was 99.11. They did it tied to 99.11, which is pretty much right where the stock is right about now. So interesting stuff afoot out here. Mr. Rock Lobster, size-tied calls in this Principia Biopharma, name that has been on the rampage of late. What is your Eye of Sauron telling you personally over there, sir, about these?
I was trying to get the message to you via the real eye in the sky Jakrati. I think this is somebody bought this company out. Ball's down like 124 points. Everything's parity. So I'm going to assume this is this is a buyout, and somebody's just loading the crap out of this Park strike. Maybe backspreading the strike. I'd have to look at like the the deal particulars, but it does appear to be that type of trade.
It does. Are the crickets back in Maine again? Do I hear crickets again, sir?
So that actually, those are real crickets. It's August. So yes, I live in a place where the only thing you hear is the crickets. When you live on a rock, you actually live on a rock. So I'm trying to. Do you want me to go talk to them?
Sometimes we have to pipe in crickets for the rock lobster for some of his comments. This time, nature took care of it for us. Crickets for him. Yeah, this one looks like it's getting gobbled up here in some crazy takeover. And someone liking these no pars tied to stock at a 4% implied vol. That just cracks me up out here. Let's see. So this one, I guess we'll watch it, but sometimes with these corporate actions, there's not a lot to watch after the numbers and the levels are announced out here. Let's move on out to our final name, our final victim. What do we got on the docket out here? This is Hci Group, Inc., ticker symbol, appropriately enough, HCI. This is an insurance company out of Tampa, Florida. Let's see. They're trading right now $54.70, off about $1 or nearly 2%. This is the name of a year ago. It was trading 42 and change. They kind of drifted at that level until the madness started, and then they dipped down to 31.61. At their low, and then they kind of were rebounding. Looks like they topped out recently. Again, go figure, June 8th was the day, 48.72. And they kind of sold off from there down to 44 and change until recently. It's like in the last week or so, actually looks like the last couple of weeks, they've been on the upswing again because all of a sudden, bam, they shot up from 46 and change up to 60, almost 61. And that was on the 10th, and then they shot right back down again. This is almost shades of Kodak here. Not quite as aggressive, but pretty close. Down to where we find ourselves now, 54.67 out here. So an interesting one out here for this usually relatively staid insurance company having some hot action of late out here. Let's see what kind of hot action our Eye of Sauron found out here today. It was, let's see, Oct 30 puts going up for 60 cents, lifting the offer. They were 25 cents at 60. Going up about 2,500 times over there on the SIBO. This looks like it's about 106% IV. So a wee bit different than our last name out here. Mr. Rock Lobster, an interesting one. This is the name that's been on the rampage of late. Someone coming in, it looks like lifting the offer for an interesting strike, the 30 strike. I mean, that's effectively their 52-week low here. And they paid 60 cents for it. That's interesting. So I could see you being worried about it retracing. That's a long way to go for it to retrace all the way down to pretty much its lows of the year, the lows of the mad maelstrom. That is March. This thing is still trading about $55 right now. So an interesting protective line to draw if that is indeed the case. One could argue maybe the strikes could have been a little bit higher, but of course, at these vol levels, maybe you can understand why they had to go all the way down there. What are your thoughts on this interesting put trade here in everyone's favorite Hci Group?
This is so I'm looking at the time and sales on this one because it has like that weird smell about it, where it trades 60, but do they buy it? Do they sell it? You would think this would be a line in the sand put, right? Normally, they don't go out, 2 months on a trade like this. Really, really odd. Because I'm seeing some volume, like there's some interspersed volume. So it trades they trade 25, or they traded 50 cents. 50 cents took out the 50 and then posted 60 cents. So, really, really odd. I mean, all signs point to purchase the way that it's trading. So usually it's, I can't imagine, them trying to accommodate something at 60 cents. Can you imagine being in the crowd and the broker's like, okay, I want to pay 60 for these. And every market maker is like, what are you talking about? I want to sell some of these.
Yeah, in the old days, that would have been the case. Now they would have been like, oh, sure, whatever.
Yeah, we're just going to put them up.
They're so beat up, it doesn't matter anymore.
Yes. We provide liquidity for our customers, but nobody else. Which, hey, look, I understand it now being on the retail side. Like, screw you, market makers. But an interesting, funky kind of trade, I have to be honest with you, on what this. But it appears that they're paying up for it. And to be honest, why, I have no idea. It's a really, it's a strange purchase. That's, like insurance, is something bad going to happen? Insurance group, are they going to announce something crazy because the cities are having troubles? It's a real weird one. I don't have an answer for why they're paying up for these puts, to be honest. But at first blush, we would say this would be a line in the sand puts, right? Where they'll take their one, in this case, barely 1%, or maybe 2% because the stock's it's a 30 strike, so they're taking 2% till October, which on its face, that's 1% a month roughly. Not terrible for this. So I could see where it'd be a great line in the sand put, but buying it would be kind of unless they think just the sky is going to fall, it would be a strange purchase.
Yeah, this is a very strange purchase. I'm with you. I would definitely much prefer to sell these. If you're buying these, you could do interesting verticals or things for probably around the same premium outlet that would get you a lot more effective bang for your buck on the way down to that 30 strike as opposed to just drawing that protective line at the 30 strike. We'll keep an eye on this one. I think I have a feeling I know how this one's going to work out, but we'll keep an eye on this one as well. As we head on into It's Monday, it's time for Uncle Mike to hold court. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, Uncle Mike is down for it. Let's see if his connection is down for it. It is time for the block of strategy. Uncle Mike, what do you have in store for us today, sir?
Gamma and delta on short put spreads. So what I've talked about in the past on this show is whenever you buy a call spread, and let's say that the underlying, let's say you're just doing a bullish call spread, you're buying it, and you want to collect upside because you're bullish on it. You're not necessarily looking for time decay, but you make it a spread instead of a single leg option because you want to have less time decay risk, less volatility risk, whatever the case may be. And the stock just goes through your short strike price. Well, at that point in time, you now have what I like to refer to as a debit spread, kind of becomes a credit spread. And what can happen with that is you now don't necessarily need the stock to go up. You just need to make sure it doesn't come down. So with that in mind, you need to trade it different. So what I do when that happened, it happened to me recently in my SPY trades. Compliance forbids me from telling you the strikes, of course, but it did happen recently. And so the way with which I wanted to handle this, and I've done this has happened to me a lot throughout my years in the trading world, but what I handled it was, okay, I can wait several months for expiration and play time decay that way, or I can go more near term, collect almost all the premium for the same strikes, same risk, and have this whole thing expire worthless much sooner. Now, of course, as we've discussed on the show before, a call spread and a put spread, if they're vertical, are the same thing, synthetically speaking. But what I wanted to look at was to see, okay, let's say I did the same spread, but I went 1 month sooner, 2 months sooner, whatever the case may be. Well, here's what happens. You don't get quite as much juice for it, but you're going to get actually more delta for it. So in other words, let's say that you did a 3-month call spread, what goes in the money, which is good, or goes totally in the money, which is good, and then you want to do maybe a 2-week or a 1-month put spread for the same risk reward, and you'll get maybe 80 to 90% as much premium as you could had you waited 3 months. Well, the good news is that you can do that, and if the market just simply doesn't go down, you can be out of your trade and collect your full reward much sooner. But the bad news is that if the market goes against you right away, you're going to have more deltas working against you right away. So a couple things that I want you to take away from today's strategy block. Number one, let's say that your call spread that you're just doing as a bullish play, it goes in the money. At that point in time, your debit spread kind of becomes a credit spread. Not literally, of course. It's still a debit spread, and you still paid a debit for it. But it now becomes more of a time decay style trade because it's in the money. And you're going to have, synthetically speaking, the same thing as a short put spread that you're waiting for time decay to happen on. So how would you trade that if that were the case? Would you be in a 3-month short put spread at that point in time? Well, maybe, maybe not. But if the answer is no, maybe you can look to sell a put spread in a shorter time frame. So remember, you have that choice, and you'll get your time decay much sooner. However, the disadvantage is that you will have more risk on the table. So that's the second thing that I want you to take from this, is that when you do roll in from a time frame standpoint, you will have more risk on the table in the near future. Now, the final thing that I want to you guys to take away from the strategy block is the fact that you don't have to change it, or you don't have to necessarily change it to the same strikes. You can just be very patient. You can wait the 3 to 4 months to 6 months or whatever it is. You have that ability. Or let's say you want to create a trade with similar deltas. You can maybe go a little bit further out of the money, but with more of a near time frame. Possibilities are endless with this. So with that, make sure that you have an understanding of what actually happens to the trade when it goes your way, and what your choice is if you want to modify or adjust it in any way, shape, or form. And that is the strategy block for today, August 18th.
All right, let's see if we can get a few of you here on the old Monday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where we pick your brains on a bunch of fun stuff here. Really quickly, on last show, we talked about, it was Trader JF Law. He had his covered call in LVGO that kind of went against him. He wanted to know if he should have gotten out earlier. We kind of talked about that, but we also said maybe you want to re-envision what you think about this name. You were planning for a blowout earnings, didn't really happen. Maybe at least take the covered call off. He says no. He says he's still in. He thinks it's range bound. So I guess he's going for the gusto here. He wants this trade to work out. At least the stock leg. He hasn't mentioned the covered call has got to be effectively worthless now, so you could go ahead and take that part off. I think Trader JF Law. But either way, interesting to hear that you're still holding on to that bad boy. Still got the bit in your teeth here. Let's look here on what else you guys have on your brain. Actually, we asked you guys a question at the end of last week, right before our Vol View show, kind of updating our end-of-the-year volatility prognosis. We'd like to get your guys' temperature, get your gauge on what you're feeling for end-of-year vol. So we asked you again, where do you think VIX and spikes will be at the end of 2020? Gave you 4 choices. Again, these are ranges, so we kind of picked the range you're feeling out there. Around where it is right now, Mr. Rock Lobster joking at the top of the show that it was glued to 22, so around this 18 to 25 level. Higher than that, so between 25 and 35. Lower than that, so shy of 18, getting back into the teens there. Or much higher, a.k.a. back to where we were not too long ago, north of 35. So this poll expires in about an hour, so I'm looking at what you guys are feeling. I won't reveal it yet. Let's go around the horn first. Let's start with the rockingest of lobsters. What do you think our audience is feeling? Also, what are you feeling, sir, if you have a vote here? Have at it. This is where you unmute yourself, sir, to respond.
Oh, my gosh. I hit every button. I think that by the end of the year, VIX will be below 18. So that's my answer on that one.
Interesting. What do you think our audience is picking the same thing?
You know what? I think the audience is a little freaked out. I'm going to say like the next quartile up. So I would say like zone 3-ish, higher than zone 3.
So 18 to 25 or 25 to 35?
Yeah, 18 to 25.
All right, so 18 to 25 for the Rock Lobster. Personally, though, he's feeling back in the teens, back to 2017 perhaps levels out there in VIX land. We shall see. We don't know who the hell the president is at the end of the year. Probably not. Mr. Uncle Mike, same question for you, sir. What are you feeling? And more importantly, what do you think our audience is feeling, sir?
I think we're both feeling below 18. And the reason is that not trying to be political here. I think it's going to be the case whether Trump or Biden wins. But I think that we're magically we may not have a cure for COVID, but the media is not going to talk about COVID near as much come November 5th or whatever the day after the election is going to be.
Yeah, we shall see. I mean, I guess it kind of depends what camp you fall into, listeners. Let's see right now what our audience has fallen into. And with about an hour left, looks like the winner is pretty clear. It's about 33% for the higher category of 25 to 35, followed by a tie for number 2, both about 21.5% for 18 to 25 and lower, below 18. So you guys not too far off from what our audience is feeling. And then much higher north of 35 is a little bit north of 24%, about 24.3% out there. So you guys are certainly feeling a little bit more vol. If you add those two together, you get north of 50%, closing in on 60% there just for those two. So 60% of you saying vol will be higher than 25 by the end of the year, which is kind of interesting, and then less than half of you saying it will be below 25. Interesting stuff. And if you get down to where the Rock, Lobster, and Uncle Mike are hanging out in the teens, that's only 21.4%. Interesting stuff with you guys. You guys have been fading this rally for a while. You've been kind of more bullish on the vol side for a while, so this is kind of what I expected, but still interesting to see it here. If you haven't played yet, if you listen to live, you can vote. If you listen after the fact, it's probably done. But head on over to @options, make your voice heard, and if you're not following us, head on over there because we do a lot of these fun things throughout the week, not just on this show. But now it's time for us to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, what do we got around the block? Let's look, let's see. Really quickly, we mentioned some of the earnings that are popping off this week. Let's run down this list again. Monday, today, JD.com. Talked about them a wee bit today. Tomorrow, Walmart, Home Depot, and Kohl's. Wednesday, Lowe's, Target, and NVIDIA. Thursday, Alibaba, Estee Lauder, BJ's. Friday, John Deere, and Foot Locker. If you want all the remove results, move reports, season reports, all that good stuff for all these names and a whole bunch more, completely for freaking free. Yes, you heard me right, for free. TheOptionsInsider.com is the place to go. Now let's go around the horn. Let's start with the Uncle and Mike. Sir, what are you watching for the rest of this week until we can gather here together again on Thursday?
I am staring down at the S&P all-time highs. I think that that's a really key number right now. And, everything in the news. That's what I'm watching.
Everything in the news. He's just got all the channels on 24/7. He's got his eyes pinned open like Clockwork Orange there, just letting it all feed into his brain. That'd be a terrifying scenario right now if you were to do such a thing. I don't think the human brain could take that much just terrible influx of news on a regular basis. Mr. Rock Lobster, same question for you, sir. What are you watching for the rest of this week until Thursday?
September VIX. October VIX, November VIX, or all the cycles, and see if anything shakes up in here. At this point, I just think it looks like a massive earnings trade that could go on for weeks and weeks and weeks and weeks and weeks and never go away. So I think the short end of vol doesn't look that interesting, but it looks like the bid for the long end is going to stay around for a while.
It does. Indeed, sir. Unfortunately, that music means this show not going to stay around for a while. It's coming to an end. If you need more listeners, just stay tuned. We'll be doing crypto pretty much immediately after this show. Going to do a nice quick hit for you guys. Get the facts. Get in, get out, get on with your day. The skew, the vol, the volume, the unusual activity, all that good stuff. So stay tuned for that immediately following the option block. I'm not going to make you wait an hour this time. I'm going to go right into it. No rejiggering here because there's no live guests in the studio. Makes it easier. But before we do that, let's go back around the horn. Let's start with the rockingest of lobsters. Mr. Rock Lobster, sir. If folks want to kick the tires, they want to join the Trading Legion, get that sweet Trading Legion shield. Where should they go? What should they do?
Get some cool swag. Go to optionpit.com. Mark will be doing a webinar this week, so look on our website for links to that. And heck, if you want to learn how to trade these option things, come on by and let us know. I'm sure we can help you.
He thinks they can help you. Find out for yourself. Make sure if they can help you or not. Optionpit.com. I got a feeling they probably can. At the very least, you get that sweet, sweet swag. If we all say it together, maybe they will start sending out these cool Trading Legion shields. I want one to put in my studio here. I'm sure you guys want one as well. Optionpit.com is the place to go to make your voices heard. And Mr. Uncle Mike, I don't know if you have any sweet swag. Maybe you get some Skippy Zeros if you visit your house. But if they want to kick the tires nonetheless, where should they go? What should they do?
stcharleswealth.com. Check out the website for more information. Would love to have a conversation with anyone who is looking for a financial advisor who's not afraid of the word option.
He ain't afraid of no options, listeners. You know where to go. stcharleswealth.com is the place to go. And if you're listening live, don't go anywhere, because we'll be back in a few minutes with crypto. Otherwise, we'll see you back here later this week. All sorts of good stuff popping off. The 100th episode of Options Bootcamp coming up this week. That should be a fun one. Maybe have a lot of you guys participating in that one. I think we got the black-hatted one back for that one, so it should be fun. We got OPR, all sorts of other fun stuff popping off this week. Then we're back together on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.